Right, hi. Now then, hi guys, let's get into this weekly outlook now. Today I'll be going literally over the markets, telling you what's going to happen, how we can go about this week and where we can trade. But first of all, we're looking at the news for the week. Monday, we don't have any high impact news, so I'll be sitting on my hands on the Monday. However, Tuesday, 3 o'clock, Powell testifies. This will bring a lot of volatility on Tuesday, so I'll be probably leaving out Monday and trading Tuesday. Wednesday, USD news again, 3, and Thursday, we've got GBP news at 7 o'clock. So I'll probably be looking after the news release on GBP. And we've got core CPI on Thursday. And Friday, core PPI at 1:30 PM. This is UK time. So I actually have my charts on US time. But today I'll be going over DXY. I'm starting off with DXY. I start off with DXY because it's king. So I'll start off on the monthly. So what's clear to me on the monthly is we are trapped in a consolidation between, looks to me, two PD arrays. Sorry. So if we get this fair value gap right here, which is now an inversion fair value gap. So if I just name that inversion fair value gap. Okay. And we've got this order block. However, I like to use the midpoints of these order blocks. So get the midpoint there. Nice line going. Get rid of that now. That's my order block. Order block on the monthly. So we're trapped between an order block and an inversion fair value gap. I'm just ranging in this range right now. So on a monthly, we have opened up this month, come down into midpoint of this inversion fair value gap. What I'm looking at right now on the monthly. On the weekly, last week I expected price to run for these highs, but we didn't. We came off this order block right here. Again, get the midpoint of this order block. There's a lot of messing around. Point this order block. Look how perfectly that lines up. So this order block's been respected here. This high, this high, this order block's been respected. So overall, price actions, alright, is trapped between PD arrays on the weekly, on the monthly and the weekly. We've got last week we closed below this fair value gap, weekly fair value gap here. We name this just so we know where we are. So on the weekly, last week we closed below this weekly fair value gap. However, we're coming into the monthly inversion fair value gap. Right. So this is, for me, how I do my analysis. I use seasonal tendencies, and I'll show you how I use these. So for DXY, for example, we've got June into July. July, we go higher into August. We go from July to September, end of September nearly, we're bearish. But this doesn't matter if order flow is bullish, because technicals trumps or seasonal tendencies. But if you have both lining up together, then high probabilities in trading by far. Like if you get technicals line up seasonal tendencies, you're in for a nice ride for the months when you're trading. But so you see, it's closed below its weekly fair value, but I've come into this order block here, and this order block here. I take the midpoint of this order block right here. This is where I'll be like to see a nice reaction into this midpoint of this order block right there. So there's no point in marking this out because I'll be marking loads of stuff out right now. But as you can see, it's closed below its week fair value gap, which means it's weaker than it's supposed to be. But we're still in bullish order flow. But we're trapped between this range here, this range to this range. So we're in a range. So trading this week will be hard, but probabilities of it going lower is on season tendencies there's a chance this low could be taken next week. But right now we've still got bullish order flow until further notice, until this low is taken. And this order block's disrespected. This rejection blocks are disrespected. So I would like more confirmation on DXY going into next week. We'll see how it reacts to this weekly fair value gap, maybe potentially getting shorts to hit this low. But if we react off this order block, get SMT, we're going for these highs, equal highs, relatively equal highs right here, and go higher. So this is what I'm looking at. That's on a weekly chart. On the daily, so we've come higher. Like last week I was expecting price to come high, take all these highs, but we've reacted off the midpoint of that weekly order block, and we've come lower, closed below the weekly fair value gap. So this low here, this low is closed on the daily, that is confirmation we're going lower into these lows, potentially down into these lows into September, where seasonally it will align. But right now, coming into this week, I want to see how this order block is respected. The weekly order block is respected here, and how price reacts to this weekly fair value gap, because it could come into here, show SMT. We could also have SMT down here for a buy. This SMT gets disrespected and go higher, coming into these highs, because high time frame order flow is still bullish. If you look on the weekly and the daily, 4 hour, we have broken structure. Could be a market maker sell model, but we want to see how price reacts to this fair value. But jumping into a trade in these conditions is not a great idea. But that's my analysis on DXY, is how we'll react in this weekly fair value gap, right? I'm undecided in which way it could go, but I'm favouring higher prices still, just because this weekly fair value gap, it was disrespected, but it's still an order block, and we're in a range, and it could be a nice, well, it could be a range bound month, looking at the consolidation we're already in. So I'm in no rush to get into any trades next week, and that's how it should be. You're preserving capital, and that's what you want to do. You don't want to be rushing into trading. If you preserve capital and trade when conditions are great, you're in for you're laughing. Trust me. So now we've looked at DXY and seen where we're at. We're neutral in direction. We're neutral in macro. We're neutral direction. Just because we've had no real breaking structure and confirmation that we're heading lower, we've just closed the weekly fair value gap. But again, we've still got this counter raise. got PD raising a discount. But yeah, we're working in this range here to here, so conditions within this range it's going to be hard to get in the trade. So now we'll look into bonds, because recently bonds have been decoupled against the dollar. So I'm going to get DXY up on my chart here, and just show you how decoupled it's actually been. So bonds are inversely correlated to the dollar. So when it goes higher, when it goes lower, the dollar should go higher, for example. So we take it back here. So we go lower on the bonds, we go higher DXY. But if you've seen in recent times, like last few weeks, but bonds higher, DXY higher. So we've got a decoupled market. So when we've got conditions like this, for example, we're going higher, it's very hard to get into trades because it's decoupled. A lot of markets are decoupled. For example, you can take EU, for example, when this moved down, it's very bearish. But you take GU, for example, it hardly moved. And you take AU, which is consolidated, and you take gold, which has been consolidated. Yeah, we are breaking out now. That's because last week on the bonds, we went higher, DXY went lower. We're getting more market symmetry back into the market, and this helps so much when you're trading. Like last week, it was very easy to trade, but you didn't have the direction, and we had no real breaking structure. We're still in a consolidation. The market's ranging still, but we had a very large range week last week, just because of market symmetry. You got everything falling on the line, and this helps a lot. So if I'm looking at the bonds, I'll go back now and look at the bonds. So on a monthly, let's just get rid of this drawing. Get rid of the drawings. So on a monthly, we've gone higher, higher. This month we've gone lower, higher. There's an order block here. There's an inversion fair value gap here. So what I would be looking at is this order block, because on a monthly, bearish order flow, this PD area has been respected here so far. Fair value gap, figure that out, it's been respected. But this order block is coming into a monthly order block, because when you're bearish, down close candles, up close candles are respected, and when you're bullish, down close candles are respected. So you wanna, if you're still bearish, then this means bullish for the dollar. You want up close candles being respected. So this order block, which is an up close candle, so at the midpoint of this order block, it's your order. There's the order block right here. So bracket monthly order block. So go to the weekly. So now I've got the monthly order block marked up, and we've got that daily fair value gap, that monthly fair value gap. Let me also mark this out as a monthly fair value gap. So we're stuck between two PD areas at the moment again. This fair value gap's been respected, going higher, coming into a monthly order block where if you're bearish, up close candles are respected to go lower. So last week came into this monthly fair value gap and we've expanded higher. On a weekly, we are bullish order flow, down close candles being respected, going higher. As we can see, take this monthly a bit further out. We closed just below these highs, which isn't a confirmation of a break of structure. So we've come off this monthly order block, come lower into this monthly area, bounced off it, come into this range here. So if we go to a daily, we see it a bit better. This volume imbalance, this gap, right. This gap's being disrespected, but we're coming into a daily order block again here. So we're at a daily order block right now. Daily order block. So we've come into a monthly order block, touched it, breaking market structure here. Break off structure. In the middle, so you see it. So we've got a breaking structure, come back, come into a premium. So if you take this range, for example, on the daily, got this range here to here. So we're above equilibrium, and we're coming to last quarter of the range, and this is where the extreme like order blocks are and rejection blocks. So we're in a deep premium right now. So this is telling me that we're at a good place to short if we are going lower. So we've come off a monthly order block. On the monthly, we are bearish order flow still. On the weekly, bearish order flow still because we didn't close above these highs. Come off the monthly order block. On the daily, we've come down, broke beneath this low, showing bearishness, and now we've come into a daily order block. I would like to see how price reacts to this within the week, because if we come higher and take out this high, these highs get going and going, and DXY will go lower, and I believe lower into near the end of September, following a season's tendency. But right now, we are still bearish on the bonds, which means higher dollar. So we would like to see just how Monday and Tuesday potentially trade, then to go higher. Now we've gone over the bonds, we'll go over euro and the pound. I will not be going over the actual forex pairs, I'll be going over the futures, because this is how I get my analysis of which ones are strongest, so forth, because it's the real price feed of the actual pairs. This is what the forex pairs get the data from, is the futures. So we'll start off with euro. We'll start from a monthly again. Right. It's just, again, it's copying DXY really. We're in this consolidation right now. It's just not very nice. You can tell. Price is not flowing nice like this move lower back in 2021, 2022, easy bearish downtrend. Even 2020, it's just coming to a consolidation of the last year and a half. Not nice price action, but it's getting harder with forex pairs, and you can tell quite clearly. But this is what you got. This is what I mean. You got. It's these conditions what make you as a trader. These are easy to trade, and I believe anyone can make money in these type of conditions. But this is what true trading. If you can figure out ways of trading within these conditions, you'll be laughing when actual when it's great conditions, for example. So we're in this range. This volume imbalance here is it's not clear to me, so I'm not going to use this as an example, but it probably would be a confluence. But going to a weekly, it might be a bit easier to figure out how we're going to. So on a weekly, we've come higher, broke above this body, this high, but we haven't closed above this high here. So we haven't closed above this high. We've just swept liquidity. Came lower into a discount. So we swept liquidity, came lower into a discount. And we've come higher off last week. Very bullish. Closing premiums, such as a volume imbalance there. Spun it higher. Onto a daily. Consolidation, breakout into. Right, this is interesting to me right now. Is this order block right here? So it's a daily order block. This is what I'm seeing. Daily order block. Right. It's coming to a daily order block, which is in a premium of this range. So we came below this range, broke structure here. Came higher. So we came. So this is interesting. So we've come higher, took up this high, come lower, come higher. So these series of up close candles here, to me, down. I mean, it's down close candle. Last down close candle is the breaker. My bad. Got a breaker block here, which is also another confluence, but it looks like we're using the daily order block. So we've come lower, broke structure here, come higher into the daily order block and a daily breaker, but we closed above the breaker. Okay. So coming into next week, that's a higher time frame PD array. I would like to see how it reacts again here. If it just disrespects this, it comes for its highs. Again, we'll be going higher. Look at seasonal tendencies for the euro. Because the euro is inversely correlated to the dollar. July, September, end of September, we go higher. If this follows suit into the months ahead, DXY rolls over and comes bearish. See, euro futures will go higher, taking out liquidity here, extremes up here. That's my analysis for euro at the moment. Like you don't have to do much, but euro is not as strong as pound, for example. I'll show you here. So if you look at the monthly on the pound, it's actually been pretty nice. We've had fairly bullish order flow coming up. You know, it has been consolidating throughout these months. However, for other pairs, it's just been a lot stronger. So we've got this monthly fair value gap here being respected. Monthly fair value being respected. So come higher. We haven't broke above these highs yet. So right, this is rejection block. Right, let's just note that. So we've got a monthly rejection block right here, working within this range here. So we'll come lower, fail to go lower, fail to go higher. So come lower, fail to go higher, come lower. Tested the monthly fair value gap last week. As you can see, bullish order flow on the pounds being evident, and we've got this weekly fair value gap right here, the midpoint being respected perfectly. So we'll name that just so everyone knows where they are. There we go. And we go higher from a weekly fair value gap, significantly higher. So if you look at euro and a pound, we are stronger significantly. We've got, if you look here on the 9th of May, this swing low, and we drag it across to these lows here. This is SMT with the pound. Oh. Doesn't look right, but just SMT. SMT. We go to the 9th of May. Right here, this swing low, right there. And you take the swing low to low here. Got SMT. So SMT. We've got SMT between euro and the pound. Pound's a lot stronger than euro, as you can tell. With this swing low not getting taken on the pound, on the euro, it got taken. At a high time PD area, which is the weekly fair value gap. This is how I knew pound would be very strong last week after confirmation of DXY going lower, reacting off that weekly order block that I marked out earlier. And the pound significantly went higher, and you could have got trades into this. Sorry, the pound went significantly higher. So for me, pound closed above this high here. The body of this high here. This could act as a rejection block, but as we see, we're coming into this monthly rejection block here. So I'd like to see how pound reacts to these areas here, as we are significantly bullish. However, it could fail to break these highs and reject off the rejection blocks and go lower. So it all, because DXY is king, as much as how significant the pound is bullish, like you can tell, it could significantly go higher because it's so bullish, but dollar's king. So if dollar does react off this counter raise, so this order block, this monthly inversion fair value gap, it go higher, and pound will have to follow inversely against the dollar, which means go lower. And I'll go to the forex pairs now, and you see they just speak the same as they do for futures, exact same. But I do my analysis on futures. So higher, boom. So hopefully, I would prefer DXY to roll over and premium raise be respected and take off these lows here. So we've got a market maker sell model, but we're working in this range, and it's not nice to when you're working in a range so forth. We have been for so long, but this is what makes you as a trader, working in these ranges. And we've got the best, ICT has the best analysis for working in these ranges. So yeah, that's good. So that's forex done. We'll go over to gold. Gold, we've been ranging this range. Take this low to this high. This is where we are within the range. We've got a breakout last week, coming into this daily fair value gap. If we go on the weekly, this weekly fair value gap being respected, going higher. Gold's bullish at the moment, which followed suit to bearish dollar. So everything was symmetry last week, but again, gold could just stick in this range if dollar wants to go higher next week. So coming into this gap, I would like to see how it reacts here, and how dollar follow suit. And because if we get market symmetry again next week and dollar goes higher, shorting gold from this area would be nice. But if you look at silver, silver is a lot more bullish than gold, or better bullish order flow. So if dollar does roll over and go lower, you want to be buying silver, in my opinion, because it is a lot more bullish than gold. Going to indices, going to NASDAQ. We look on the monthly. This month we've gone higher straight away off the bat, a bit lower, a bit of a rundown, lower. If you're on the weekly, this weekly fair value up here, respected, which is also a monthly fair value gap, for example, which I'll actually mark out instead. Sorry. So here, which is respected a lot nicely. So on the weekly, higher, this fair value gap here, respected. Boom, higher, this weekly fair value gap here, again, respected, going higher. So last week, again, higher. I'd like to see a retracement a bit lower, so we've gone lower, higher. I'd like to see maybe this down close candle here be respected. If it comes lower into this one, we've got these two fair value gaps here, this order block. Again, you've got to let Monday, maybe potentially Tuesday play out to see if we can get any more longs into new all-time highs. Targets, go to new all-time highs. There's nothing to target, so you've got to use just maybe standard deviations of each range, for example. So if you go high to this low, for example, and you put, oh no, wrong one. Do it the other way, sorry. So, I haven't got any set. Then you go one standard deviation, go 1.5, 2.5, 2, 3, for example. So as standard deviations, so for example, you can go to 1, 2, 3, or if you're getting in these positions, but if you want to be safe, go 0.5. It bang on last week. You could have bought Monday when it hit into here, maybe SMT between S&P, bang, 0.5 standard deviations of this range. You get what I mean? But this is how I calculate if we went into all-time highs. But again, if you look on the weekly, S&P is just as bullish as NAS. It's very nice. NAS is a bit more bullish, as you can see. This low getting taken, and NAS not taking this low. Bang, higher. NAS is a nicer pair to trade. But again, that's my analysis on this week. And if you've got any questions, leave them in the comments, and I will be answering them. And I'll bring them up next time in the next weekly outlook, and I might potentially do midweek outlooks, and how basically we can work around and find trade ideas and get on the right side for the week, because that is the main thing. If you're on the right side and you've got a good trading strategy, how you can define which day is going to be a large range day and how you're going to get in it, what time, for example, where you're going to set your stops, what you're targeting, what you're risking. I will help you all with that. Just leave it in the comments if you've got any questions, and I can go potentially make videos of what you suggest. It would be great. So thank you all for watching, and I'll see you guys later.